Okay, so in case you weren't aware, it was hard to avoid it really, but there was a further slide in Chinese stocks overnight. At one point, the CSI, the principal futures contracts in China, was down by 10%, limit down. In fact, we closed off those lows. But interestingly, other markets in Asia started to stabilise. There was positive finish in Australia, I believe, and Indonesia as another example of a market that bounced back. Subsequent to those closes, we've seen some, as I suggested, some interest rate action from the People's Bank of China. They've cut their outright interest rate by 25 basis points, or 1/4%, and what they call the reserve requirement by 50 basis points. The reserve requirement is the ratio of assets to loans that banks have to have on deposit with the People's Bank of China to borrow money there. So, so basically adding liquidity, making it easier and cheaper to borrow money. And that's engendered a decent bounce across the board, really. We also had some data out of Germany today, which on another day would probably have warranted a close scrutiny. But to be fair, it's all about the very biggest macro picture at the moment, and even something as important as the German GDP is probably on the back burner. Nonetheless, we had the GDP numbers for the second quarter on a quarter-on-quarter basis. Came in at plus 0.4% against a forecast of plus 0.4% and a prior read of plus 0.4%. That's we've seen a number of these figures coming out, and they've been conveniently in line and with both forecasts and prior reads. I would be disappointed if I were sitting in Frankfurt looking at that, but I suppose it could have been worse, is the honest answer.
And then, it may become worse if, obviously it's a rear view mirror view on the German economy as well.
Oh, absolutely, yes, of course it is. Second, as we know, they're exposed to Asia through their export-led economy, and a downturn there would be potentially negative for that. And then we had the German IFO survey. This is the second of their survey-based data points that we look at closely, along with the ZEW. First of all, then the expectations. Looking forward, these numbers are all related to August. So the sentiment indicator, which is what this effectively is, came in at 102.2. That was slightly ahead of the forecast, 102.0, but a fraction below the prior read of 102.3. So no better, no worse, really, is in terms of the outlook. I do wonder, though, if they surveyed people this week, what the read might have been. And then in terms of how people were feeling about the current climate, the current assessment number, 114.8, that came in at, that was actually well ahead of the forecast of 113.9, and the prior read, coincidentally, also 113.9. So people were happy about how things are going now, perhaps less impressed looking forward. We'll take it all with a pinch of salt today and come back to it next month, I think.